and welcome to another episode of Baranov TV, designed to demystify the world of accounts and tax and to help your business grow. Now today I want to talk about something that has been declared a seismic shift by people within our industry, and that is the new 30-day payment window for capital gains tax on property sales. Now this comes into effect on the 6th of April this year, 2020, and will primarily affect those who are selling second homes or buy-to-let properties with taxable gains. If you've lived in your home for the whole period of ownership, it's unlikely to affect you because something called private residence relief will apply, and that should mean that there's no taxable gain on the sale. Obviously you will need to check that, but that is primarily the distinction between whether this change in the regulations will affect you or not. If you are affected, you will need to have your financial ducks in a row in good time before that sale goes through, because you will need to calculate and pay, or calculate, declare and pay any tax that results within 30 days of the completion of that sale. So there's a really tight window. This contrasts with the current situation, which is that if you sell a property within the tax year, so between the 6th of April one year and the 5th of April the following, you don't need to declare and pay that tax until the 31st January the following year. So it's a significant change, hence the fact that it's been described as a seismic shift. So what do you need to consider? Well, you need to make sure that you've got, as I said before, all your financial ducks in a row, and that means that you need to have to hand quite a lot of information before that sale goes through, so that you can actually get that declaration in within the very short window. So you need to have all the full details of your property so that you're selling. You need to know how much you bought it for, when you bought it, and the cost of any purchases or improvements that you've made during the period of ownership. And that may require a professional valuation, and obviously those things do take time. So you need to make sure that you've got all those sorted before the sale goes through. You also need to have, and this might be the sticking point, an estimate of your income over that period, that year, because the tax that will be due will depend on your income in the year, either being calculated at 18% or at 28%. So if you don't know what your income is in that year, then you are not going to be able to estimate that tax and pay it over in time. Obviously the complication is going to be if your income fluctuates dramatically, or if you're selling more than one property, because you're not going to know what level of income you're going to get. So you do need to give that consideration. It is a big change, and there are going to be people that struggle with how that impacts them. So if this is likely to impact you, or if you're not sure, then please do get in touch. It's what we're here for. So get in touch, let us know what your situation is, and we'll be able to talk you through as best we can and help you to make sure that everything's in place and that you don't hit any penalties or interest charges if your declaration and payment don't get in time. So that's the new CGT rules, effective, as I say, on the 6th of April 2020. I'll leave you with that, and I'll see you all very soon.